Hey everyone, thanks for tuning in for the second quarter update. It's been a little while. I've had a lot of client meetings with you, been onboarding new clients, but I'm excited to take a step back and share with all of you some exciting personal updates, Redwood Money updates, and some of my thoughts on the broader market as we enter this midpoint of the year. So let's jump right in. Our agenda today is pretty straightforward. I'm going to start with some Redwood Money and personal updates. Next, I'm going to share an investing secret that you've all experienced in the last couple of years, but it's good sometimes to take a step back and look at it, and that allows us to inform our behavior going forward. And we'll finish with talking about some scheduling updates for second and third quarter meetings. So let's start with some of those updates. The first one, obviously, we're thrilled about. Many of you know this, but Sophia is a big sister. Jordan's got baby Zoe coming due October 12th, 2023. And so Sophia's excited. She doesn't fully understand it. She turns 2 next month. And so she still looks at us a bit quizzically when we say, there's a baby in mommy's tummy. But as we get closer, we're so excited as a family to be expanding. And Jordan is such a rock star, and I've loved getting to see her just navigate this season with grace. And so I am excited to see the Clark family grow and to share those future updates with you as we get closer to having that baby. Another personal update, I shared this last December that I had an exciting and kind of audacious goal for me set for this year, which was to run a 50K race, which is 31 miles. And I enlisted the help of my friend Greg, who has done a couple of these ultra marathons. And he was an awesome guide. This is him on the screen running down some trails during this race. It had a lot of elevation. We were in the Almaden Hills, and we trained from January to May. Ran the race on May 13th. It was about 90 degrees. It was a fun and challenging course. We met some super cool people while we were out there, and it was kind of 6 hours of agony and ecstasy and just stopping at every aid station, building up the strength to continue. And there are a lot of parallels between this experience of doing endurance sports and what it takes to build a successful financial plan. And so I'm sure I will pontificate in future client updates about things that I learned in the process of not just running the race, but all of the training that led up to it. The importance of accountability, of setting a schedule, of sticking with things even when they don't feel great, and checking in and maybe sometimes reducing pace in order to go further. All of these things I felt were really helpful. And I would just encourage you, if there's something, whether financial or otherwise, that you've been wanting to pursue, there's nothing like setting a date out in the future where you're going to do something audacious and then building a plan to reach that in order to maybe cultivate some new habits and behaviors that can be really life-giving. So I'm glad I did it. I don't plan to do another one anytime soon, but wanted to share that update with you, and you'll probably hear more about this in the future. And then this one is a business update. I've got a new website. And so for a long time, the Redwood Money website honestly looked terrible. I was pretty embarrassed by it. You just came and it said, welcome, let's connect. And it was a Calendly meeting scheduler. And so I'm very grateful to the team at Upward Marketing Collective, my friends Paige and Chris, who helped me to take a lot of the content that I've been sharing with prospects and turn it into a really helpful website. So I won't go through the whole thing today, but I recommend you check it out. It'll take you like 5 minutes to browse redwoodmoney.com. And you can, learn more about me. This is all stuff we usually cover inside of our client meetings, right? Talk about everything with a dollar sign, how I advise on that, and the specific goals that we can move towards. And then I'm also excited for this blog. I'm going to be both sharing YouTube videos and future articles to the blog. And I didn't have a really effective place that I owned to share that information. And so I'll be sharing that stuff here. Probably most relevant for you as clients are 2 things relevant on this page. The first one is if you go to redwoodmoney.com/login. This is a really easy way for you as a client to just have one URL you have to remember to get to everywhere related to your plan. So if you click on financial plan, that'll take you to Right Capital. If you click on investments, that'll take you to your investments at Betterment. And then if you click on schedule a meeting, this will take you to a meeting scheduler where you can book time with me. So head over to redwoodmoney.com/login. The second thing that's relevant is I am capping my clients as we head into the end of the year. And so my ask would be that before you introduce anybody else to me, that you actually send them to this redwoodmoney.com page, and they can fill out this form in order to express interest in starting to work together. And this is just a way for me to make sure that I am able to continue to serve you as my existing clients while thoughtfully adding as I approach client capacity. And so if they come to redwoodmoney.com/get started, they can fill out this quick form, and I'll follow up with some next steps. So check out redwoodmoney.com. I hope that you like the page, and then again, use this for logging in, and for any referrals, just direct them to redwoodmoney.com/get started. I want to talk a little bit more about client capacity and just some of my reflections there. The first one I want to share is just my extreme gratitude. Last year, I did this exercise at the end of the year of looking back on 2022 performance. And when I started Redwood Money, I thought I had, clear line of sight to my first 20 or so clients. And my hope was to get to 36 by the end of the year. I ended the year at 57 clients. And that was only possible because of you, my clients. That first of all, you trusted me. And second of all, that you cared enough to share about the wins that we were getting, the peace of mind you were enjoying, or just the fact that apparently I'm a nice guy and fairly competent. And so you referred your friends. And over half of my clients at the end of the year were sourced from client referrals. And so I greatly appreciate those referrals. And you've exceeded my expectations. I thought that I would be hitting these client capacity issues maybe at the end of 2024. And here we are in the middle of 2023. And I'm recognizing I need to pump the brakes, especially with a baby on the way, in order really to operate authentically and in accordance with my values. One of the things you all noticed during our discovery meetings was I talked about a core differentiator of Redwood Money being attention, that I was going to cap my clients to make sure that I could serve them effectively. That gives me greater balance, and it also gives you better service. And so this is me owning that, recognizing I've got limitations, and making sure I don't get to the point where I've gone overboard and then have to pull back. And ultimately that would be a bad experience for both of us. I think that comes from a core value of mine that I hope shows up in our financial planning conversations, which is that my highest value in life is not optimizing for more income or higher net worth. And in the Bay Area, it's really easy to think of net worth as a scoreboard, as income as a scoreboard. I'm an achiever, and I know all my clients' income. And so there are definitely times where I see somebody get a raise and I think, man, I want to chase a little bit more. But I love this passage from the book of Ecclesiastes where this really wise man, the preacher, he says, better one handful with tranquility than two handfuls with toil and a chasing after the wind. And I always want to keep one hand open. I'd rather have one handful of work with tranquility, with the availability to use my other hand to be present at church and with my family and with my friends, and to be able to hold a golf club and do all the other things I want to do, than be so locked in on pursuing more that my hands are full, I'm toiling by the sweat of my brow. And ultimately, this chasing after the wind concept is sometimes you get to the point where you can look back and you've got more, but you don't have a plan for what to do with it. And so I hope that helps you, that you know that this is something that I struggle with, absolutely, but I'm now making enough in the business to support the family in this season. And it's important to me for a season to slow down, make sure I've got capacity, and say no so I can enjoy a little bit more tranquility and have my hands open and available for whatever's next. So what does that mean? I'm not shutting off clients forever, but early next year, I'm going to reopen my client list. In the future, I plan to hire to expand Redwood Money. In the meantime, as I just showed you, clients can express interest through redwoodmoney.com/get started. I hope you feel a little excited that you made it in before the cutoff as a client, and that you're in now. It maybe feels a little bit more exclusive. And that's part of my hope as I look to the future, is that people who want to work with me, it's a really exciting thing to be stepping on board, and that we're all being really thoughtful about this relationship. I think the final thought I have here is that any no should be making room for a better yes in our lives. I talk about this oftentimes with budgeting. Budgeting shouldn't be about constraining your lifestyle so you can't enjoy it. What we need to have is a really compelling why, a yes that we're saying about some other future goal that is so much more worth that thing that we're saying no to that it makes it an easier decision. So I want to free up time for family and also scaling financial planning impact with content creation. I've missed being able to do these videos. I've just been so busy doing 20, 25 client meetings a week and following up on those that I haven't been able to write articles, to create videos. And I'm excited to get back into that rhythm once I'm not onboarding a few clients a month. So thank you. I hope that this helps you in thinking about your own life, and I appreciate again that you guys have come on board and put me in this position. It's a high class problem to have, and I'm grateful to you that I have it right now. Now let's finish with just a couple of thoughts on investing. Here's the secret. There is always a meteor that is heading towards your portfolio, and the news wants you to know all about it. They want to tell you about everything that could go wrong. Even if that meteor they know is on track to barely miss you, it might be helpful to get your eyeballs to tell you what would happen if that meteor hit. Now here's the problem. If we always have our eyes to the skies instead of what's in front of us, we're probably not going to be as effective in our lives and in our portfolio management. And so as I look back on the last 18 months, from beginning of 2022 to middle of 2023, I love this chart. Dimensional Funds updates it every single year, and they show the growth of $1 invested in world equities. So this doesn't require you to be a genius and pick one stock. This is just if you took $1 and you're able to somehow invest it in every company in the world. And there are some mutual funds from Vanguard, from Fidelity that do this. And the portfolios that I manage in your 401ks and your IRAs, they reflect this. Global diversification without needing to make a specific genius bet. What happened between 1970 and 2022 is that dollar grew 80x to $80. Now, you can see in the midst of that, it wasn't a steady and stable ride. Not only were there downturns, but those downturns were commonly a result of these big macroeconomic effects. And so you can see some of these, the S&P being down 43%, oil shocks, articles about the death of stocks, U.S. inflation back in the 80s hitting 13.5%, which we forgot about until this last year. And you can read all these headlines. These were all reasons that could easily keep you out of the market. And over the last 18 months, we've had similar stuff. Think about it. We've had inflation at 40-year highs. Interest rates then rose by the Federal Reserve at the fastest rate ever. And as a result of that, bonds had their worst year ever in 2022. It was not a great time in January 3rd. That was the high of the market. If you looked over the next 10 months, the stock market fell by 25%. Cryptocurrencies collapsed. Russia invaded Ukraine and tipped off all of these geopolitical issues. We had a regional banking crisis early this year, back in March, with many clients saying, what should I do with my cash as Silicon Valley Bank and Signature Bank and First Republic failed? And just 2 weeks ago, we were embroiled in this debt ceiling standoff. And I had clients asking me the same thing. Hey, June 1st is coming. Is the government going to be able to pay its bills? What I knew is, having the history of this, is that there's always a meteor. That actually the debt ceiling standoff really had until about July 15th, and that the stakes were way too high for them to not reach an agreement. And so a big part of my job is behavioral coaching, helping you to see, hey, here's your short-term money, which was never invested and is available to you right now. This is long-term money, and we want to experience the long-term growth that our innovative economy is achieving as people go to work every day and try to scale revenue and impact and increase profitability. So I want to say, we've seen these meteors, and here we're sitting. It's June 13th as I film this, and the stock market is up over 20% since October if you're looking at the S&P 500. I'm really glad that we stayed invested. And guess what? There's more meteors coming. We've got an election cycle coming around the corner, and regardless of who the candidate is, one side is going to be saying that the other side will be the death of the stock market and vice versa. There's commercial real estate issues that are coming down the pike because there are going to be loans that need to be refinanced at these higher rates, and we're starting to see that happen. There may be a recession we've been waiting for this for the last 18 months, but it could happen. Who knows? Maybe AI overlords are going to take over as ChatGPT and other large language models become more and more advanced and we invest in artificial intelligence. Economic conflict with China as there's more of a battle and we go from this unipolar world system more and more towards a bipolar system with multiple world powers. I say all of this not disregarding it, not saying that there won't be pain in real people's lives and in our portfolio, but saying that knowing these things are coming and that in the background of life, the economy is growing, that we've got opportunities to focus on things we can control, like budgeting and taxes and driving up your income and being thoughtful about any new expenses. That's where I want to focus while we take advantage of the growth of the markets and we stay disciplined as investors. So I hope that this is a secret you can remember, and when the next meteor is coming, you can put it in the context of the broader market, and I can do that for you as your advisor. All right, so what's next? I hope this video was helpful. I'm going to continue to create helpful content because I know as I get to the point of not being able to walk alongside another 75 clients over the next 18 months, my best shot at continuing to magnify my impact for you and other clients is to create helpful content that helps them with their financial plans and helps you with your financial plan. I hope you'll schedule time to connect. If you haven't had your Q2 meeting, you can do that at redwoodmoney.com/Q2. I still have some availability in July. Our Q3 meetings, I'm going to ask that you schedule those in advance at redwoodmoney.com/Q3 and schedule them for August and September. My hope is to take most of October off when the baby comes, and we can do that if we've got those meetings scheduled for August and September. And of course, as November and December hit, we'll be doing year-end tax planning and meeting together. If you have any questions, you can email me back or you can text me at 408-617-8757. Again, I appreciate you watching. I'm celebrating alongside you, as I know these milestones I'm celebrating are just one of so many across these households. And I look forward to speaking to all of you soon. Thanks.